Hello, and thank you for joining. This is the recorded session for the Advice for Employers Dealing with COVID-19 webinar. The webinar was hosted Tuesday, March 24th from 1 to 2 p.m. This webinar is brought to you on behalf of Maximus Rose Living Benefits. My name is Bryn Blackwood, and I'm an employer benefits specialist. Thanks so much for joining. So the overview, the topics today, we'll first discuss the latest COVID-19 announcements. We'll then talk about the proposed government economic plan. We'll also discuss employment insurance, EI sickness benefits, and EI regular benefits, the work sharing program and records of employment, also known as ROEs. And we'll briefly touch the emergency care and emergency support benefits that have been introduced. We'll talk about the Employment Standards Act and the new COVID-19 leaves of absence. We'll speak to temporary and voluntary layoffs. And the question period, I've actually written and recorded the answers into a Word document, so that'll be attached as well. This webinar will provide general information and should not be relied on as legal advice or opinion. This webinar is geared towards employers governed by Ontario's ESA. Therefore, if you are a federal employer, meaning that you employ people who work across multiple provinces, then you also need to look at the Canada Labour Code, the CLC, because that's some added legislation that you have to adhere to. All of these options are subject to restrictions in any collective agreement in unionized workplaces and the employment agreement in non-unionized workplaces. All options should be considered carefully in light of potential risks. So the latest COVID-19 updates as of March 24th afternoon. Ontario Premier Doug Ford has ordered all non-essential workplaces to close for 2 weeks starting midnight on Tuesday. To see the list of essential workplaces, you can visit www.ontario.ca, and that'll give you more information, more in detail about what is allowed to be open versus what is deemed non-essential. The province has also announced that they will temporarily cut hydro rates. Hydro rates on traditionally on-peak hours will be charged for the off-peak hour rate for 45 days. The MPs are currently in session to debate all of the COVID-19 legislation that they have proposed. Construction sites are allowed to stay open, but Doug Ford did mention that he's appalled by unsanitary conditions on various sites. And there are 573 cases of COVID-19 in Ontario, 239 in Toronto specifically. So there are various measures that the Government of Canada and the Government of Ontario have proposed to support Canadian employers and individuals. This is a rapidly changing situation, so therefore, just please do keep up to date with everything as it is changing hourly. So the first measure that they've introduced for businesses has been the flexibility for corporate taxpayers. This is a proposed income tax payment deferral until after August 31st, 2020. So rather than having to pay income tax on the typical due date in April, the CRA will allow businesses to defer the payment of any income tax amounts that became owing on or after the announcement. No interest or penalties will accumulate on these amounts during this period. The second measure is the Business Credit Availability Program. The BCAP is increasing the amount of credit available to small businesses in Canada. This is intended to provide more than $10 billion of additional support through the Business Development Bank of Canada and Export Development Canada. And they'll be cooperating with private sector lenders to coordinate credit solutions for individual businesses. Businesses seeking support through the BCAP should contact the financial institutions with whom they have a pre-existing relationship so that the financial institutions may assess the client's financial request. The third measure is the temporary business wage subsidy. So this is supposed to subsidize 10% of payroll up to $25,000 per business until June 20th, 2020. The government is proposing to provide eligible small employers a temporary wage subsidy that will be up to a maximum of $1,375 or $1,375 per employee and $25,000 per employer. Businesses will be able to benefit immediately from the support by reducing their remittances of income tax withheld on their employees' remuneration. Small businesses will get wage support by reducing how much they hand over in payroll deductions rather than receiving a government check. That's a very important point. So it's not going to actually be a check as we're seeing with the enhancements in, say, the GST or the child care benefit deposited directly into a bank account by the CRA. What you'll be doing is doing the math for the business itself for the total subsidy based on the CRA's guidelines, and then remitting that. So let me give you an example. Say you are applying for the up to $25,000. So to get your 10% or $2,050, you would reduce your current remittance of federal, provincial, or territorial income tax by $2,050. You could continue reducing for future income tax remittances up to the maximum of $25,000 for all remuneration paid before June 20th, 2020. Next is the Insured Mortgage Purchase Program. Under this program, the government will purchase up to $50 billion of insured mortgage pools through the Canada Mortgage and Housing Corporation to provide long-term stable funding to banks and mortgage lenders, and to help facilitate continued lending to Canadian consumers and businesses. And the fifth measure for businesses is the Extended Work Sharing Program. So this will provide EI benefits to workers who agree to reducing their normal working hour. So what does this look like? The Work Sharing Program is an adjustment program designed to help employers and employees avoid layoffs. Employees may share work and agree to reduce workload by as much as 60%. There are measures in place specific to the COVID-19 pandemic. The maximum duration of the agreements has been increased to 76 weeks. They've waived the mandatory waiting period between agreements, and they are easing recovery plan requirements. Service Canada, as mentioned, will provide EI employment insurance benefits to employees to make up some or all of their lost income. Work sharing arrangements are subject to employer application, agreement, and acceptance by Service Canada and the reporting requirements. Help for working Canadians. So there are various measures in place to just help the average worker that has been affected, as we all have been, in some way by COVID-19. The first is the expansion of EI, including the two new enhancements to the emergency care benefit and the emergency support benefit, which are requiring approval and will come into effect in early April if approved today or tomorrow. The GST credit has been boosted. The Enhanced Child Canada benefit has been boosted. Canada student loan payments will be frozen. I have a feeling that these are all going to be approved, but in case not, this is on the table for today. But the expansion of ESA leaves of absences are already in place immediately and retroactive to January 25th. So the EI benefits expansion. A quick overview of EI. It's the federal payroll deduction paid both by employer and employee, and it provides 55% of average insurable weekly earnings to a maximum. So the maximum yearly insured earnings is 54,200. If you're earning that or more, then you will get the maximum weekly payment. The maximum weekly payment is $573 a week. And any earnings over the maximum yearly insured earnings are not insured by EI. EI's regular benefits will be for employees who have been laid off or face a shortage of work due to a workplace shutdown from COVID-19. EI's sickness benefits will be for employees who are sick with COVID-19 or quarantined due to COVID-19. For these employees, the 1 week waiting period for sickness benefits has been waived, and there's a number highlighted to call. Canadians quarantined upon arrival from abroad or under the direction of a health official can apply. This means that if you have any employees who have been traveling abroad under this travel advisory, they have to self-isolate for 14 days. Therefore, they can claim EI sickness benefits. People claiming EI sickness benefits due to quarantine will not have to provide a medical certificate. Encourage your employees to apply for EI as soon as they stop working. This means that even if you're behind on completing an ROE, they can still apply, and the first payment will be within 28 days that all of the required documents and the application were received. And employees who don't qualify for EI, they may be eligible for the emergency care benefit or the emergency support benefit. So if you're filling out a record of employment, an ROE, for an employee, there are a few sections to make note of. There's the reason for separation, block 16, the code that you have to select, and the ability to add comments. If an employee is sick or quarantined as their reason for separation, you would select code D. You don't need to add comments. If there's a shortage of work for your employee due to business closure or decreased operations, you would select code A, shortage of work, and no need for comments. And if the employee refuses to come to work but is not sick nor quarantined, you could choose code E, which is quit, or code N, leave of absence, as appropriate based on the case, based on the situation. And for that, you can add comments if absolutely necessary. So the ESA, there's a new unpaid job protective leave of absence, or two of them, I guess, under the same category, called emergency leave, declared emergencies, and infectious disease emergencies. These leaves both prohibit employers from requesting medical notes, and they're retroactive to January 25th, 2020, which was the date of the first case of COVID-19 caught and diagnosed in Canada. So the declared emergencies leave, employees will be entitled to an unpaid leave of absence where there has been an emergency declared under the EMCPA, the Emergency Management and Civil Protection Act. As of the time of this recording, that has not been invoked, and therefore that leave is not available as of yet. So just continuing to look at the ESA Amendment Act, The Ontario government has passed emergency legislation to provide unpaid job protective leaves of absence for the following reasons. The employee is under medical investigation, supervision, or treatment for COVID-19. The employee is acting in accordance with an order under the HPPA. The employee is in isolation or quarantine in accordance with public health information. The employer directs the employee not to work due to a concern that COVID-19 could be spread in the workplace. The employee needs to provide care to a person related to COVID-19, such as a school or daycare closure. And the employee is prevented from returning to Ontario because of travel restrictions or possibly even all of the border closures that are happening. I hope nobody has an employee in that situation, however. The new leave could apply for quite different periods of time based on a case-by-case basis. For example, an employee who self-isolates for 14 days and is then able to return to the workplace would be entitled to a leave, which would be unpaid for that period of self-isolation. A different employee who was unable to return to Ontario because of travel restrictions or a lengthy daycare closure might be entitled to a much longer period of unpaid leave. Employees could also be entitled to the new leave for more than one reason, suggesting that even if an employee is able to return to the workplace following self-isolation, the employee could continue to remain on a leave as a result of childcare obligations resulting from the closure of schools or daycares. And this is just more of the same reasons, but important to reiterate that an employee will not be required to provide a medical note if they decide to take this leave or need to take this leave, more likely, but the employer can require the employee to provide other evidence that is reasonable in the circumstances, such as a note from a daycare or evidence that an airline has canceled a flight, but not a medical note. So now that we've gone over the first 4 topics, we'll talk about temporary and voluntary layoffs. And it's important to relay again that this is general information and should not be relied on as legal advice or opinion, particularly when it comes to layoffs and terminations. It's always best to speak with your legal counsel before moving forward and to consult with your employment agreements and collective agreements. So voluntary and temporary layoffs. A temporary layoff is 13 weeks in a consecutive 20-week period. If you are laying off an employee, you are obligated, just as like a termination, to pay for their employee benefits for 30 days. This includes making a contribution to their pension or to their benefit plans, whether you have one or the other or both. If the layoff is less than 35 weeks in any consecutive 52-week period, the layoff is a temporary layoff in cases that meet these circumstances to the right. So these circumstances or conditions are: the employer continues to pay into the employee's benefit or pension plan for the duration of the layoff period. Or for non-unionized employees, the employer calls the employee back to work within the time agreed to by the employer and the employee. Or for unionized employees, the employer calls the employee back to work within a time agreed to by the employer and the union. So therefore, if you are laying somebody off for less than 35 weeks in a consecutive 52-week period, you need to keep that employee on your company's benefit and pension plan. Generally speaking, if a layoff lasts longer than permitted under the ESA, termination of employment could be deemed to have occurred if it went to court. And employees who are entitled to a leave of absence under the ESA cannot be laid off while they are entitled to their leave. So if you have somebody on a leave, you cannot lay them off until they've returned from that. And on temporary layoff, insurance premiums still apply. Premium payment continues if they are continuing on the plan. Reminder that if you're a federal employer, you need to follow the Canadian Labor Code guidelines on layoffs. Other voluntary measures for employees. Employers may be assisted by voluntary measures accepted by employees. These may include a voluntary agreement to reduce pay, a voluntary agreement to reduce weekly hours or implementation of rotating shifts, a voluntary agreement to take an unpaid leave of absence, and a voluntary work sharing agreement. All of these voluntary measures should be written. Employers should consider what, if anything, they may be able to provide employees in exchange for these agreements. For example, maybe keeping them on their benefits if they are reducing themselves to a part-time schedule voluntarily. If you are considering termination of employment, you need to look at the termination provisions in the ESA, especially if you're laying off a large portion of your staff. Employers do have the right to terminate employees' employment as a result of economic circumstances. However, contractual, meaning the employment agreement, or common law rights, which is precedents throughout the Ontario courts, including notice periods equal to or in excess of the ESA, will apply. For employees who are entitled to common law notice, the economic impact of COVID-19 may impact a common law notice period. If there is a scarcity of work, for example, there may be more of a lengthy common law notice period. The period might be lengthened. The theory being that it'll take longer for them to find alternate work due to the economic downturn. Important information for any retirees. This is great information for your parents or for people who may be approaching retirement at your organization. The required minimum withdrawals for RIFs, which is what a lot of times retirement funds are transferred into upon retirement or by age 71. The minimum withdrawals have been reduced in recognition of volatile markets and their impact on many seniors' retirement savings. This will provide flexibility to seniors that are concerned that they may be required to liquidate their RIF assets to meet minimum withdrawal requirements. Similar rules would apply to individuals receiving variable benefit payments under a defined contribution registered pension plan, which you may have at your workplace. So thank you so much for joining and for listening. As mentioned, all of the questions have been compiled into a separate document. If you don't receive the separate document, but you do receive the webinar and you want to see the questions, please feel free to contact me or whoever had sent you the webinar. My email is brynnb@maximusrose.com. That's brynnb@maximusrose.com. You can also just email me any questions that you may have, or feel free to speak to any Maximus Rose representative. Thank you again, and I wish you health during this situation.